how do you supercharge your returns? And how do you do it in a way that's safe and smart?
Welcome back to our 5-part video series where today we're going to talk about supercharging your returns using a strategy we call the Nomad strategy.
And what Nomad is, you know, with cavemen back in the day, they had to travel because their food traveled, their source of food traveled, and so they didn't have one set place, and so they had to learn to travel with their food.
So with this strategy, and it's actually a strategy that I myself am using right now, that's what you're doing is you're kind of a little bit nomadic. And so that's the first hurdle that you're gonna have to get over is, you know, you're gonna have to be willing to buy and move a little bit. It's easier probably for the single man or the single woman. It might be a little harder for families, and as kids come into the picture, it might be even a little bit harder. But for me and my wife and our daughter, like, we love it, we enjoy it, we meet new people, it gives us life and light, and we're able to reap the benefits of supercharging our rate of return.
Yeah, and I would just, if you're looking into doing real estate investing, or you are a real estate investor, this is an awesome way, just like Colin said, to supercharge your rate of return. How do you do that, Colin?
Yeah, and it's one of the best ways to get started, and the reason being is because it's easy to get started, right? There's a low barrier to entry. When you buy a house, you buy your first house, and you live in it, you own or occupy it, the bank doesn't view that as very risky. And so they allow you to get much better financing, and you can put less down on a property.
And you also get better interest rates too.
Exactly, yeah, you're gonna get better interest rates. So for example, for us, right? We moved in this condo, we had a duplex that we owned and lived in before that we now rent out. But for this purpose, we're gonna talk about our condo. We moved into this condo and we bought it for $18,000. That $18,000 is comprised of $13,000 of a down payment, which is 5%, and then $5,000 of closing costs. The reason our closing costs are a little bit higher is because we financed a PMI buyout, so we don't have mortgage insurance on our loan.
Yep. And so what that does is it increases his internal rate of return over 10 years to 23.5%, which is huge. And the after-tax to nearly 21% rate of return. That's huge. And so that money, that initial $18,000, over 10 years has turned into $142,652.
That's after-tax dollars, right? So those are that's money that's not going to be taxed again. That would be like you earning in your day job $175,000.
It's huge. And then when we look at return on equity, the return is going to be nearly 67%, and the after-tax return on equity is going to be nearly 49%, which is again huge. And it's important to realize though that, you know, with this strategy and with the leverage that you're going to introduce, is it's more risky, and so you need to learn to manage that risk.
Absolutely, and the reason one of this strategy allows you to manage your risk is, right, your investment is also your mortgage, right? So like it's your primary living expense already.
Yep.
Something you already need to live. You're either renting or owning. That's just you paying your investment. But then also you do need to manage your cash flow, right? Like if you buy a property and plan on moving out of it, that property better not bleed money every month, right? Like if you're having to continuously put money into it, it's way too risky. You should sell the property. Whereas, you know, so you need to analyze the property beforehand upfront in a good way. And then you need to manage your cash reserves, right? So like if something does go wrong, because things do go wrong in real estate, believe it or not, you need to have the cash to be able to replace those things.
Yep. And so that's exactly what me and Colin do, is we help people to, whether it be through the Nomad strategy or through other strategies, invest in real estate. Maybe you can talk a little bit more about what you do, Colin.
Absolutely. So for me as a real estate agent, if I get a client that reaches out to me that's interested in investing, we sit down, we have an initial consultation, we talk about their goals, we talk about what they want out of real estate, how much time they want to put into managing their real estate, and you know, really what that looks like for them for 5 years, 10 years. And then we take that and we translate it into a plan. And what that plan looks like is we're gonna analyze a few different properties and target an asset to go after, start writing some offers, and ultimately buy a house. Sam, tell us a little bit about what you do, since you're bragging too much about me and not enough about yourself.
Yeah, so at Vitality Capital Management, we're financial advisors. But you know, we don't get charged through commissions. We focus, you know, when you make money, we make money. We kind of remove that conflict of interest. And what we do is we help you to analyze these properties through, there's kind of a lot that we talked about through this video series, and we'll help you to, you know, get that second opinion and analyze these properties so that you can make sure you're doing the right thing and you're getting the best investment. But then as well, when it comes to supercharging your returns, either through the Nomad or through, you know, making sure that your capital is working hard for you, that introduces, like I've talked about, increased risk. And so we help our clients to be able to really manage that risk so they can do it in a safe and a smart way. And the last thing that we really focus on is your after-tax return. We help people through the way they structure their real estate and through different accounts that they might be able to use. We help people to save a ton on taxes so that you can increase your overall rate of return over time. We're excited to work with you guys. We know there's a lot of growth and a lot of returns that are out there that we can help you to achieve.
Yeah, and we just want to say thank you for tuning in with us this long. We know you've been tuning in all week. Hopefully we've added a lot of value to you. If you have questions, please reach out. Text us, email us, however you can get a hold of us.
Yep.
Thanks for tuning in.